Hey guys, thanks for stopping by thetradinganalyst.com. This is Taylor. We're going to take a look at the market here. I'm going to discuss the chart here for the S&P 500. I'm going to go over some sentiment data. I'm also going to cover some individual components that make up the market here, because typically when the leaders are leading, the market does well. When the leaders are not leading, the market does not do well. So we're going to discuss those as well. So let's get right into it. So first and foremost, I want to just show you this S&P 500 chart here. This is the monthly chart. We're going to get into a lot more detail into the chart, but I just want to show you guys this, that we're breaking out to a new all-time high. Okay, so stocks are very bullish. Whether you are think the world is going to end tomorrow or anything like that, you cannot disagree that right now, in this moment, as of last week's close, the market is extremely bullish. You cannot argue that, okay? We're heading to new all-time highs, okay? Can we crash tomorrow and head to new all-time lows? Yeah, anything is possible. But right now, the market is extremely bullish, all right? So I'm bringing that up because I want to show you some sentiment data. So right now we're on the AAII sentiment, AAII.com sentiment survey right here. Every week, investors here of the AAII answer a simple question, okay? Do they think the market will be higher in the next 6 months? All right, and you can see here that, here, let me cover this first. So the historical average is 38%, okay? 38% are bullish. Right now, we're below that average, okay? Only 34% expect the market to be higher in 6 months, in the next 6 months, all right? As price headed higher this week, we closed the week higher. Okay, they're taking this survey at the end of the week, all right? And it's down 1.6 percentage points from last week. The market's heading higher and people are getting more bearish, all right? Less bullish. Now, the historical average for neutral is 31.5%, all right? Right now, we have almost 38% people are neutral. As the stock market is heading higher to new all-time highs, you have a bunch of people neutral, more people than the historical average. Okay? Bearish. Okay, the historical average is 30%. Right now, we are a little bit below the historical average. But as you can see, people aren't necessarily very bearish, but they're not that bullish as they should be. All right? So these are typically numbers that you see at market bottoms when things are not going so great. All right? This is the opposite of what you see at a market that's making new all-time highs. All right? So if you don't know how sentiment works, you want to be worried if everyone and their mom is bullish. Okay? If 50% of the people surveyed here are bullish, you want to think, okay, maybe the market is going to pull back here because we're at an extreme, all right? Because in order for the market to have higher prices, you need to have new money coming in, And with all these people, less people bullish and everyone neutral, that means people have cash on the sidelines. So that means there's plenty of money to be put to work. Now we're going to look at the NAAIM exposure index, okay? This represents the average exposure to U.S. equity markets reported by the members of the National Association of Active Investment Managers, okay? These are essentially the vast majority of active investment managers, people who manage money for other people. This is a survey regarding them, okay? And this is their exposure to the U.S. stock market, okay? So how much money, how much client money do they have are they putting to work, okay? can see right here the peak back here. This is the peak when the market peaked back in December of 2017. It was all the way up here. All right. You can see since then it has been downtrending. So if you look here, you can see this is the S&P 500 right here. So you can see the S&P 500 has been heading higher, and we did make a higher low right here, but we haven't broken these highs. So as the stock market is heading higher, we haven't even broken these highs right here. So people are less exposed right now than they were, when price was a lot lower. So that means there's a lot of cash on the sidelines to push this market higher. Okay, this is not something, see how it peaked all the way over here in December of 2017? It was all the way up here. Okay, that's when you want to look for extremes. Okay, this was an extreme exposure level up here. So you want to think, okay, maybe the market might be due for a pullback, and it did. Okay, but right now we are seeing the opposite. Okay, we are seeing a lack of exposure to the market right now, and yet the market is pumping to new all-time highs with this sentiment and with this money still on the sidelines. So what that means is, imagine what's going to happen when these people start to flip bullish one by one. What they'll do is they'll start buying and chasing this market higher, and that is how you have extended bull runs, which is what I think we are about to embark on. And this is something, I'm being consistent here, guys. I'm not just saying this, because of what happened last week. I've been calling for this. So this is all adding up. All right, so now that you see the sentiment, let's take a look at the chart here in more detail. This is something that I've covered in past videos. You can see here, this is the monthly chart, by the way. I'll discuss the daily chart here, but right now, the monthly chart is what we're going to be focusing on. So, again, lots of people talked about the market like it was some euphoric market. Well, yeah, the last year has been great, but if you notice here, the last 2 years we've been trading sideways. Okay, 2 years we've been trading sideways, back and forth, up, down, and then we finally broke over this resistance. You can see this clear level of resistance right here, there, right here. This month, right here, this was July. We gapped over it and we closed over it. The next month, August, held over it. We tried to take a dip right here, but ended up holding it right here. The next month, held over it as well. The following month, which was October, we tried to dip below, but ended up closing not only back above that resistance, but we closed over the high of the previous 1, 2, 3 months. Okay, and this month, November, it only has 1 trading day left, but we are getting some follow through right now. So after trading sideways for 2 years, that's what a lot of people forget about. Okay, after trading sideways for 2 years, we are heading higher. So now let's take a look at times where this has happened in the past on the monthly chart for the S&P 500. So as you can see, the best example is the nearest example. That is the sideways trading market of 2015, 2016. You can see that clearly right here. Sideways, sideways, sideways. Broke over it here, traded sideways for 3 months, and then this candle here that this month that started that rally closed over the previous 4 months highs. Very similarly to how October just did right here. And coincidentally, the rally started here in November as well, okay, for 2016, November. And we're starting that here as well. Here's another kind of similar situation right here. Resistance, resistance, broke over that, headed much higher. All right. Here is another case right over here. resistance for a few months right there, and then broke over it, headed higher. I know this doesn't look like much action because it's a zoomed out version of the monthly chart, but this is like 6 months of sideways trading that is right there. Okay, here's another one right here. This is about 10 months of sideways trading. All right, there you go. You go, sideways trading, broke over it, and then headed much higher, right? Another instance over here, you can see traded sideways within this range right here, broke over it, and headed much higher. And again, these moves may not look like much because this is a monthly chart, but imagine this. This is about a year or multiple years. This is 1999 that it broke out. We didn't start heading lower until 2001. So that's 2 years of upside move after this sideways trading. Okay, so I can go on and on and on. Okay, there's so many instances of what we're seeing here, and 9 times out of 10, it heads much higher. The fact of the matter is that we're making new all-time highs, and the vast majority of the time when you make a new all-time high, it continues to make new all-time highs, especially when you are in the beginning stages of a new all-time high. We just broke these highs. We just made these new all-time highs. Very similar to here, where we just started this move right here. Very similar to right here, where we had this resistance there. We broke over right here, and that was like a 2-year upside move right there as well. So are you getting the picture? Getting the picture? So to me, a lot of traders over the last couple of years, let me show you, I'll just cover the weekly chart, or I'll do the daily chart. Over the last 2 years have gotten accustomed to this sideways market. Okay, so bearishness has been rewarded at times. You can see there was a big down move here, a big down move here, a little retracement there, a big down move here, pretty decent size down move there, and there. Okay, this is a lot of sideways action, but as you can see from that monthly chart that I showed you before, it's not always like this. So I know that many of you have been trading before this, but a lot of you guys are new to the market this last couple of years, and you're getting conditioned to that this is what the market is going to be like. So you get rewarded for shorting at resistance, okay, and you get rewarded for buying at the lows, okay. But what I'm telling you is that we are about to embark on a multi-year breakout, okay. I've shown you why. The compression on the monthly chart, sideways trading, leads to a breakout 9 times out of 10. Okay, and we're just now breaking out of that range. Just now. Even if you zoom into just the last year, you can see right here we've been trading sideways within this range right here for virtually, what is this, 6 months or so. Okay, about 6 months sideways trading. This is not a euphoric market. This is not a market that has been heading straight up this whole time. Okay, we've basically been trading sideways for the last 6 months within this range as well. So we've got a lot of juice in the tank, and we're just now breaking over that level, guys. Okay, we're just now breaking over that level. So let's zoom in to the last 100 days. You can clearly see a break over this resistance. Okay, resistance, resistance, resistance. We broke over it here. We gapped over it, traded sideways for a bit, and now heading higher. Now we could potentially see some kind of a retracement lower, maybe to fill this gap, something like that. Who knows? But the major support here on the S&P 500 is 3020. Okay, 3020, right here. Now the near-term support, mini support, is going to be right here, based off of the resistance that we made last week from all these highs. That level, to give you a price level on the S&P 500, just to give it a nice round number, 3050. Okay, so 3050 is that first level of support. 3020 is that level of support. below it. Now I want to kind of point something out to you as well. I'm not saying that this is going to happen, but this is something that happened last time when we broke out. I believe that what we're seeing now is more modeling this breakout right here, okay, rather than this breakout right here, all right? But just to kind of throw this out here, the last time we had a breakout similar to this one that we're seeing right now was in 2016, and you can see we broke out and then we headed lower, even back below this support right here, and then we blasted off higher. I'm not saying that is going to happen. I think that is less likely to happen right now, but I'm pointing that out because a lot of people, you know, when they saw this breakout and then a breakdown right back into support, everyone got super bearish, okay, super bearish. But in my opinion, if we come back down to these levels, that would not be the time to become bearish. That would be the time to be buying hand over fist. I want to point something else out. We had this uptrend line right here. Boom, boom, boom. And we came down, hit that trend line, okay? So if we head lower, we've got this uptrend line right here, okay? I can't extend it much further than that, but that'll be lining up perfectly with that support eventually, if and when we head lower. So just kind of be prepared that if that happens, okay, I'm long right now the market, but anything is possible. Just be prepared. If we do see some kind of a retracement, we've got tons of support below. It wouldn't be the time to start calling for a top. It would be the time to be starting buying hand over fist. Okay, don't let every little day be holding so much meaning. We're getting a massive breakout similar to we did over here, and a retest would be totally normal, and in fact the time to be buying massively. Okay, so just kind of be prepared for that. So I'm going to cover some of the individual components of the market to give you guys an idea of what we're looking at. Okay, I'm going to cover the weekly chart here or actually I'm going to go the monthly chart for Apple. Okay, very strong move higher. We broke over those highs, very similar to how we did over here. Well, first let me draw this right here. And the other thing to mention too is that Apple just reported earnings, okay, and it broke out on earnings. So that move to me is still just starting, okay. So we broke over that resistance right there, all right, and we're about to head much higher. Here we are breaking over that resistance right here, headed much higher. Here's another resistance right here, broke over that, headed much higher. Here we have another level right here where we had this peak high resistance here. We broke over it here and went on a multi-month run. Okay, similar to the action here. There was a peak over here, dipped, came down. Look at where we retested right here. Anyway, we broke over that resistance right here and headed much higher for several years. So I'm telling you right now that Apple can head much higher, and Apple is the biggest company in, I believe it's either the biggest or one of the top three biggest companies in the market. So we've got that. JP Morgan, this is something I have covered in the past. You can see sideways trading for the last couple years. All right, and we're just now starting this breakout. Very similar to right here. Okay, trading sideways, broke out of that, heading higher. JP Morgan, the biggest financial stock. We've got Google right here. Google just reported earnings, failed to break down, didn't have a huge showing, but Google is been trading sideways here for the last couple years. All right, very tight range, and now we're just breaking over that right now. All right, this is the monthly chart. Okay, this is not a euphoric market. Google, here's again that resistance, broke over it here, headed higher. Here's another one, boom, There's that resistance, traded sideways, broke higher. Here's another one. This one looks very similar to what we're doing right now, okay? Because it was kind of messy around here, up, and then it finally took off, okay? So, Google, one of the biggest companies out there in the world, all right? So, Google, Apple, JP Morgan, another one, Amazon, has yet to really get moving. But Amazon is super coiled for a move higher. Look at this range right here, this channel. Okay, if we break out of that channel, it's very similar to this channel right here. Okay, you can see sideways trading, up, really tight, really tight. And once it broke out over that level, you saw a massive breakout. Okay, Google or Amazon is looking like it wants to do that once again. You can see there was a big volume day the other day. That was from earnings with a green close. Now we just need to break over that level, and we can break out much higher. So these are the huge companies that make up the market here. One last one we'll cover here is Microsoft, and I want to go back. You can see here clearly break out of this very tight range. Okay, very tight range. Similar to how we did over here. Boom, very tight range. Trading back and forth. Broke over it right here to new all-time highs. And you can see saw a massive run. All right. I'm going to show you going back 5 years. All right. Move my face out of the way so you can see. You can see here's another one back here. Sideways trading. Here we go. Broke out of that. Headed higher. We're just now starting this move right here. You can see here's another one right here. Sideways trading within this range. Broke over it, and a massive move ensued right there. So a lot of people, they get really focused on the day-to-day movement. You know, oh, it broke out, but the last few days have been, you know, kind of choppy and it's not going anywhere. Well, you got to be patient because eventually this is going to break out pretty large. We broke out on earnings and a news release that they secured a $10 billion Pentagon contract. So I'm showing you these charts here to show you the leaders. These are all leaders of the market. Microsoft, Google, Amazon, Apple. We've got JP Morgan. You can go Facebook even. Facebook broke over this resistance on earnings. All right. Gapped over that resistance on earnings after trading sideways for like 4 months. Okay. So you've got all of these leaders in the market doing what they're supposed to do, leading. So do you think that this is going to push the market higher? I do. Okay, I think it's pretty simple. And a lot of these stocks here, like Amazon, Facebook, you know, Google even, JP Morgan, they just started their runs here. Okay, they just started their runs. There's a lot of other stocks out there that are performing really well. But I just wanted to kind of point out, highlight these major players here in the market, because typically the market moves with these stocks. And when they're all moving together, I think that it's a recipe for a massive breakout in the market. So you've got, just to kind of recap, you've got sentiment, which is really low. Okay, you've got fund managers, which have very little cash deployed in the market. Okay, they've got cash on the sidelines to push this market higher. You've got a breakout over the monthly resistance level on the Sp 500. Okay, and I showed you those several other instances where it's happened and pushed the market higher. I've shown you these individual components, Facebook, Apple, Amazon, Google, Microsoft, JP Morgan, and shown you that they're about to break out as well. So this is a very bullish market, and in my opinion, this is just the beginning, and we're about to see a very massive breakout. It's been very consistent with this, and until proven otherwise, because right now all we're seeing is more and more evidence that this market is going to head higher. We're not getting the opposite, okay? And we're seeing those recession headlines disappear from the media right now, okay? Funny how that works. In summary, I think the market is going to head higher, and I hope this video has helped you out. And if you don't already know, I run a private membership group here at thetradinganalyst.com where I share and reveal profitable trading alerts, both entries and exits via text message, so you can trade from anywhere. All of these entries and all of these exits were both texted to members here at thetradinganalyst.com in real time. And as you can see, the winners far outnumber the losses in not only quantity but in quality as well. You can see several trades here over 100%, almost 200%. Historically, over the last 17, 18 months, that's how long we've been tracking these trades via the portfolio tracker. The average win is about 51%. The average loss is 34%. And on a dollar basis, because not all of our trades are the same size, okay? We do recommend position sizing for these trades. Each alert comes with a position size listed with it, so you know exactly how confident we are in the trade, and it gives you an idea of what kind of capital you should deploy on these trades, and that's a big factor in our profitability. You can see the average win is more than double the size of the average loss, and that's because we know when to push and we know when to pull back, okay? Total gains here of the last 17 or 18 months, $316,000. That is not an account value. This is total profits, $316,000 in total profits by following all of these trades here for the last 17 to 18 months, all right? What else was I going to say? The other thing that you're going to get when you sign up and you join today are the watch list and the open position list. The watch list is there to help you prepare for these trades ahead of time. Most of these trades get put on the watch list so that you can learn and grow and get better. Additionally, the open position list has all of our open positions, has the stop losses listed, as well as the targets and any other vital information that I think you should know about the trade as well. In addition to that, you're going to get access to our private member-only videos, which covers content that you won't see anywhere else. It's for members only. And this is a way for you to get inside of my head as I see the market. And it's in your way of getting inside the head of a profitable trader. That's me. I reveal the trades that we're going to be looking at, the open positions that we're tracking and trading, as well as I cover the market conditions and give you some specific levels and information to watch as well. You're also going to get an educational video section here. I've had this service for about 7 years now, and I've done over 20 hours of educational content. You're going to get access to that when you sign up and join today. In addition to that, you are getting virtually 24/7 access to me personally via text, email, live chat, and anything in between. So if you have any questions or concerns or comments or anything under the sun about the trades or the market in general, I'm here to help guide you through the market. That's what I'm here for, to help you grow your account consistently. So you're going to get all of that, the watch list, the open position list, the member-only videos, the educational content, in addition to these real-time profitable trading alerts that are going to put money in your pocket. So if that sounds good to you, I'd like to invite you to join today. And when you join today, I'll start sending you alerts as soon as you sign up. So I look forward to seeing you in there. Have a great rest of your day.